Rob, I think the blowout number really reflecting the health and strength of the US economy, I guess you could say. But what do you think it ultimately says? How do we explain the number, and what does it mean for the Fed?
Well, this might sound a little bit like forecasters' sour grapes, but I do think it's worth entertaining the possibility that the non-farm payrolls report is not the most reliable indicator of what's actually going on in the US economy. It is at odds with almost all of the other monthly labour market data in what it's telling us. And I think you sometimes have to look at it and go, okay, this 1 month was maybe just a one-off. And there was certainly a bunch of one-offs within that number that led to the enormous figure that we saw.
Interesting, right? So the question is whether or not it can be replicated. You seem to suggest no, and I think that would be pretty easy to agree with. Off the back of this, though, I think the market reaction's been interesting to watch as well. Tech stocks have just come off what has been a 5-week rally in the United States. That's despite the job print suggesting perhaps more rate hikes to come, which would be ultimately bearish for markets. So what do you think is driving equity trade right now?
Yeah, and again, I think this is, the gut reaction is, I suppose, understandable. People are thinking, yes, well, if we've got this very strong labour market, the Fed's going to carry on tightening, and that's clearly not good news for tech stocks who would love to sort of buy into the pivot or pause story from the Fed. But then if we think about what we're actually looking for in terms of these labour reports, we want jobs to be being put in place at a slower pace to enable wages growth to fall. But wages growth is falling, down to 4.4 from 4.8 this month. The employment cost index, which is a much broader indication of what's happening in wages, has been falling for 3 consecutive quarters. The personal incomes numbers on a monthly basis have been coming down. So actually, we don't really need it. After all, the end result's already happening without this. So I think we can not get too worked up about this. And we were expecting another 25 basis points from the Fed anyway. That just is now being cemented in. That'll certainly happen. Bit of uncertainty on what happens after that.